Good morning, everyone. This is Daily Trading Analysis with a weekly recap for the first trading week of the year, starting on Tuesday. And this week has been focused on the jobs and labor market, and we've been pretty damn red. This week, it's been all red after red day. But I have something interesting to show you that perhaps might give you some interesting ideas for next week. And because every market pullbacks, every market has red days, and we've been super high. And the reason why we are pulling back might surprise you, or maybe not. So let's get into the fundamentals and then into the technicals, as always, from top to bottom, from the Nasdaq to the individual tech stocks, dollar, small caps, to really see what is happening under the curtains and to really be prepared for next week, because I think next week, the first trading week, full trading week of the year, is going to get more volume, and more participants mean, I think, better price action, and that's what we all want. First, we are going to review the fundamental analysis. First, on Tuesday, we got the S&P manufacturing PMI continuing going lower, 47 instead of 48. This beats the sentiment of not recession, but yes, we are cooling down. Economy is cooling down. The next thing on Wednesday, the big next thing was JOLTS job openings. And this was really a surprise because less job openings means less ratio of workers versus job openings, and that was 1.4 versus 1. So less opportunities for people to really jump after new jobs means less increase in wages, less opportunities to increase our pays, and also less inflation due to less wage pressure. So these jobs openings was a little bit of an uptick on the sentiment. But look at this, ISM manufacturing PMI continuing under the 50, and manufacturing employment was a big uptick. So these two were really not what the market was expecting. And overall, people were expecting on Wednesday to what? FOMC minutes. And FOMC minutes said that interest rate cuts are off the table for now. Remember that market is pricing in an aggressive, really aggressive path of interest rates cuts. Look at this. This is not changed this week. This has not changed from the 525, 550 current interest rates to 375 or at the end of 2024. That's 1, 2, 3, 4, 5, and 6. 6. 1.50, 150 basis points of interest rates cuts next year. I don't agree with this path moving forward. I think this is quite aggressive. And the Fed is telling us we are thinking about 3. 1, 2, and perhaps 3 around here. The market is pricing in double the amount of interest rate cuts. And these expectations remains here. As you can see, this is right now the current meeting probabilities in the Fed Watch tool. Market is not adjusting expectations on this path. So perhaps they have to adjust expectations in other part of the market, that is price. So be really careful, because we might see continuation to the downside if we are continuing seeing bad data that feeds the fact that the Fed will not cut sooner than later. But next week is really important. We are going to see that in a minute. But let's continue on Thursday. Thursday, we got ADP employment. and that crashed expectations. 164,000 versus 115,000. Employment surpassing everyone's expectation, and market continuing lower. Until now, Tuesday, Wednesday, and Thursday were red days, big red days. Overall, Wednesday was a nightmare, big sell-off. Initial jobless claims came also lower than expected, and S&P manufacturing, S&P Global Composite and Services came higher than expected. So this was also not the expectations. This is not the expectations. This is not the expectation, and you can start thinking, okay, market is just adjusting because they are not seeing what they want to see. We are not seeing these kind of things go the way we are supposed to go, and that's why the red happens, because we are not meeting market's expectations. And the final day, the most interesting day of all the week, Friday, NFP, non-farm payrolls, crashing to the upside, 216 versus 170. Hourly earnings 0.4 more than expected. Earnings year over year 4.1 more than expected. Unemployment rate 3.7. We were expecting an uptick in unemployment. Labor market remains super strong. And ISM services PMI 50.6. The only thing that was an uptick in sentiment, I think, was this services PMI going lower. We were expecting 52, we got 50. But the rest is just miss after miss after miss after miss. So this ISM services PMI, I think, was the only reason we start going a little bit higher in the morning, but then back, close the day even flat. So what is happening? On the fundamental side, we have our reasons to think that the data is not coming as expected. We are still seeing strong labor market, strong job openings. The Fed is not willing to cut as expected, strong employment, unemployment not increasing as expected, big payrolls, big earnings, big PMI. So it's obviously we have to be strong. We have to continue to the downside, seeing selling pressure, because this is what happens when we get big data like this. So, but you can see this is the weekly chart on the continuing NQ. Look at this move. At some point, we have to pull back. Where are we pulling back is the key to really understand what is happening. To really recap on where we are right now, we have a lot of liquidity up here on all-time highs. But apart from that, remember on the daily, we have this fair value gap here that is being respected on the other side in here. We tried to go higher and we failed. We didn't take this liquidity, so I'm still bullish overall. But this is something we have to really think about. Where are we pulling back? Where are the buyers sitting? Right now, the 20 moving average is just not providing support, but the 45 moving average, they are. I have these two on the daily chart for a reason. And the 45 usually provides good levels here right now. And on the NQ current contract, look at where are we. We are in this fair value gap here. That's what I was watching, the daily fair value gap. And we are also on this fib retracement from bottom to top on the golden pocket right here. 61.8 retracement right here, and a doji. So basically we are in here, finding support in this fair value gap, closing with a doji, and we found some buyers. But we are now leaving behind inverted fair value gaps, various fair value gaps that we might retest and continue lower. Be careful with this move. I'm bullish for next week. I'm bullish overall, but I'm started to think, okay, be careful with this. Until now, we just gone straight up, respecting every bullish gap, fair value gap. But this one up here, be really careful for next week. That's the only thing. But until then, I think we are going to see, we can see long opportunities. So what happened on Thursday, basically? This is the 1 hour, and on the 1 hour here, where the fair value gap starts, we have these pivots on this liquidity that is here and here, the white lines, and those were basically what I was watching during let's just put the 30-minute. I was watching, this is here, the liquidity here, and the liquidity here, basically. So during pre-market, we started going lower, as always, on pre-market. I think I got a trade here. Let me just go after on the 1 minute, and then we continue lower. I was watching this because the data was going to come out, and when the data got out, we tap this liquidity. With high probability, I knew that we were going to tap the pre-market high at some liquidity up here. I have this and also this, depending on the strength of the data. The data was not super hot, so we just held the first one. And the bad thing is that I didn't trade in the afternoon, because Friday afternoon I usually don't trade, and I already got hundreds down here. So they pull back a lot, and we basically finished 0.09, so basically flat. So what happened? We tapped that liquidity, we went strong higher against this 30-minute chart, this 30-minute fair value gap that we got here. This is the fair value gap that we got. I was watching the entire overnight, all this part, I was watching this 30 minutes. If we were crushing, I was more bullish, but we were not able to do that. So I was waiting for that to be cleared, and then I tried to jump in, and basically I didn't find any good opportunity, because look at the price. The price was quite efficient. A lot of weeks going up, down to where there's nothing. Then move, and then a big move at 10, and that's all. That's all. Then grinding, and then this huge fair value gap was not super retested at first, so I couldn't go higher. So the market just was lacking strength overall, fuel. There was no buyers on Friday afternoon. But interesting trades were happening in pre-market, as I was saying. These are my trades during, this is the London Open. I always see the London Open. I was watching this liquidity down here, the one that I mentioned earlier, and we took this and we displaced. We put a fair value gap, and I put a trade. I put a trade really tight stop on this week. I usually put it down here, but the stop was right here. 2.71 for this week. For this liquidity up here, 14 points, almost 300, done. Done in 1, 2, 3, 4, in less than 10 minutes. So this was enough. I was perhaps also watching this, but I was not confident because we didn't take this liquidity like this. This was a better setup for me, but we didn't take this liquidity. I was hesitant. We are red this week. We have to adjust our targets also. My target was only this one, 14 ticks, 280 first trade. And I was just seeing, okay, this trade was quick, let's see if we hold the fair value gaps that we are leaving behind. And the reason is no. You can see we were not able to hold either these or these fair value gaps. We then pulled back again, we got the liquidity and then displaced. Okay, let's see if we can hold the inverse fair value gaps. Not either. By the way, this was a nice move with a 1 minute order block here. That order block was also destroyed. So what are we doing here? Are we strong? Looks like we are not. Even though I took a trade, we got displacement. This is maybe a B plus setup. And but then look at this. Inverted, crashed. Fair value gap bullies crashed to the downside. So nothing was holding. Choppy price action, uncertainty, indecision, and we were moving lower. So we continue moving lower through the daily fair value gap. And I took another trade down here. I saw this big displacement. This didn't like, but the only thing that I like here was that we were trying to push every time. And this displacement got a nice fair value gap, and this was a cheap trade. Another tight stop, getting liquidity, stop right at the wick again. Entry on this first green candle, target just for a scalp. I just wanted some more points, risking 4 points to target 18, 4.5, and another trade, 360. And my day was done. More than 500 on a Friday when we are so red in the week on the Nasdaq. I'm green on the first week of 2024. And I really like. I'm not super green, but I just want consistent gains. But this is not a good market for me. I am not looking shorts, I am looking longs, and we have to adjust our expectations to what the market can offer. And I think right now the market can only offer scalps with one contract. Let's see what happens with the fair value gap. It got destroyed with the news, and then this is what happened. The liquidity got taken, and then we started seeing hundreds of contracts being trapped. I saw 1,000, not in one block, in 5 blocks, more than 200 contracts 5 times on the bid, getting short, getting trapped down here in this area. I saw one down here and we pushed, another one and we pushed, another one and we pushed. So they trapped a lot of shorts down here. But that didn't mean that we were going to fly on Friday. A lot of people were excited to see this V reversal, but a Friday afternoon with all the week in red, this is what happens. At best, we are going to get flat. And this is what happens. This is what happens. Two pushes into liquidity and then go directly close the day flat. So remember, the overall context is just that we are, let me just clean this a little bit. We took these liquidities. The overall context is just that we are going to see way okay. So this is the context on the daily. The context on the daily basically is that we are going, for now, we are going to watch this retracement higher. So I'm a little bit bullish for next week, but I'm watching the resolution of this fair value gap. If we start seeing shorts again down here and we put a higher low around here, oh boy, the next thing is this daily fair value gap that we might see also. Anything can happen with this data. And more than ever, for the forecast, you have to also adjust expectations based on fundamentals. Next week is CPI week. On Thursday, we have CPI data. And on Friday, we have PPI data. So be really careful, adjust your expectations, anything can happen. I always say the same because it always matters. It always matters. Let me just remove these two. It always matters. So in the 4-hour, we can also start to see where the congestion started. So this zone, I think we might clear a little bit in the open. We might start seeing this kind of move on Monday, but watch this 4-hour also. This 4-hour, this liquidity, all this has to be retested. I don't think we are going up here with this data unless CPI comes way lower than expected. But I think we can see some opportunities to the upside for this retracement on the bearish week. So how are the rest performing? Well, not pretty good, right? Apple is being destroyed on fundamentals of lower demand, lower price targets, and it is right now sitting on the daily fair value gap, leaving a gap behind. So I think Apple, it's the one that is dragging the market down because let's just check from last day of the trading year, 7% to the downside in 4 trading days. This is insane. So Apple is the one having problems. Microsoft, it's holding pretty well in this range, 365 to 376. Tesla, it's also being destroyed due to fundamentals, and it's looking pretty bad. I was noting this breakout, but this breakout failed miserably. Look at this, and it's now into the range again. So Amazon, how are Christmas holidays looking? Well, Amazon is looking pretty bad, so the data should be weak, should be quite weak. And we are getting into a range. We tried to move higher and red. Shorts starting to be aggressive. Google, right at this close, holding this big green candle. And I don't know, it's in the middle of the moving average. We need more data. But every single stock of the Nasdaq, it's like this. It was strong, and then this was the weak of the weakness. Nvidia pushing higher. Nvidia has its own catalyst, its own, I think, part of people that is super bullish on AI, and Nvidia is just it's just a hard stock on their portfolio. So it's still moving higher, and Meta, it's also showing a little bit of strength here, honestly. Meta and Nvidia are the only ones that are looking decent. But how about the rest of the market? We really need to find convergence and divergences to really find our edge. And the first thing we need to look at it's at the dollar. Dollar was super strong this week, and as you can see, it put pretty nice push this week, and that's why the strength in the dollar was the weakness on the stock market and equities market. But look at this Friday doji. Again, uncertainty, equilibrium, transition. The same for the Nasdaq. So we have to wait and see both data and also what the market does. We suggested a retracement for a fair value gap in the Nasdaq. So the same applies for the dollar. We need to see both markets to really see what it wants to do. If it wants to go higher, we took a lot of liquidity. We are now on the dollar on the daily fair value gap here. So looks more bearish than bullish. And the Nasdaq look more bullish than bearish. So it is something that we have to adjust to. We have to see price action. And in order to do that, we have to be patient. We have to have discipline to really see what the market wants to do and then apply our risk management. This is the second time that the Nasdaq tries to go higher and it's confronted with a lot of sellers. So this is starting to look like liquidity, and we might just do this on Monday. So adjust your expectations and be nimble, be flexible, because this market, it's about that. We ended the 2023 in a strong way, but right now it's again, we have to be patient. There's a lot of way downside. It has more potential, but I think the real potential is really to see this consolidation and to look a way out of this consolidation for at least some opportunities to the downside until these fair value gaps are starting to be zones of really targets. So that's why I'm bullish for next week. Small caps was also, I think, was super weak also, the same as the S&Ps. And I think we are seeing, look at this, we are not able to close up. So we are leaving a little bit of gaps down here, but again, the same retracement. This retracement, this pullback on this week was across the board, from the S&Ps to the banks to the, everyone was pulling back because this was taking profits. The dollars, it's looking a little bit bearish up here, but was super strong through the week. Treasuries are all to the downside, and it's just risk off for now. Utilities, staples, healthcare were all green. Energy, red, financials, red. Technology and consumer discretionary were the laggards. So we have a clear picture. The picture is profit taking, a little bit of risk off to start the year on a good shape. Next week, more volume, more participants, the first full trading week of the year. We have our targets for a retracement. Let's see what happens in here. And for the dollar, we have also the same targets. We are starting to see sellers jumping in. So this move down might provide us with even better opportunities on the equities market. So as always, be patient. Be patient. Anything can happen. We can move up and then move down, retrace 100% of the move. Anything can happen in this market. That's why you have to be flexible, adjust your bias, and also manage your risk to the extreme. And then you will be successful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like. I do these weekly recap videos every Saturday for a weekly recap to recap the week from the fundamental to the technical analysis and also to be prepared for next week. So thank you for that. Thank you for supporting the channel. If you want to see any more content or more of specific content, just let me know in the comments down below. And if not, remember that this is a weekend now. Discipline, patience, risk management are key for success. But for now, enjoy your weekend and see you on Monday. Stay safe, everyone.